Welcome to the All About Alts podcast, where we explore the world of alternative investing to help you find financial independence. Join our host, NewView Trust's president, Jason DeBono, as he covers a variety of topics with different guest speakers to discuss tax and alternative investing strategies. It is never too late to start taking control of your financial future, and we are so excited for you to be joining us for this opportunity to hear from some of the best in the business. Hey, everybody. Welcome back to the All About Alts podcast. I am your host, Jason DeBono, joined with not only an old friend, but also a good friend that helped us kick off season one. And here we are as we embark into season two, Gregg Cohen from JWB Real Estate Capital. Gregg, how are you, man?
Buddy, I am great. Thank you so much. I didn't know that I was going to get to kick off both seasons here. What an honor, man. Thank you, bud.
We're excited to have you back, and it's only fitting as you helped us kick the show off a little over, I guess, almost a year ago now. It's crazy, to see the growth and really in both from a business standpoint, but also just in, the things we've talked about and some of the things with different guests throughout the year. It's really cool. We started this podcast with the idea really of just helping bring some info about alt investment strategies and tax opportunities. And man, we have covered a lot of ground and we're coming back full circle, I think, to someone that's been in this space a long, long time. And I would say probably one of the handful of firms that we know that really has been, dealing with both alternative investments, real estate, and IRAs before any of it was cool. So good to have you back, Gregg, and good to see you. Everything going well?
Everything's great, man. I know, you and I go so far back. It's funny to think about when we started. I know we were kind of the younger crew getting into this game. I think we both started in our early 20s, and now I know, I've eclipsed 40. Not sure about you. You always look so good over there, so I'm not sure about you. But now we're getting older and wiser, and I'm excited to be able to share some stuff with your audience here. But more importantly, it's just been such a wonderful relationship with NewView. Over a decade, and you can't really say that between two businesses, to share so much mutual business together. It spanned, getting close to 2 decades now. Really, really special. So thanks again.
Yeah, and I love the longevity, because while we are getting some gray hairs and I too have eclipsed that 40 mark. We're not the babies that we were when we started, and I think not only are we getting wiser, the marketplace has really forced our hand a little bit, and we're in a unique side. From a NewView standpoint, because we custody a little bit of everything, and we talk about alts in, a variety of ways. And so, real estate is a piece of the puzzle in the alt world. And we see, everything else. And we've seen investments come and go, and we've seen investments that look better today than they did yesterday. And we've seen asset classes that don't look as good today. But what we've learned through that process is when we come back to real estate over the right amount of time in the right market and doing the right things, there is really no better asset class to navigate through ups and downs. And it's crazy to think that when we talked a year ago, we were talking about interest rates rising. Neither of us, thought they would rise as high as they have. And yet here we are now. Fed announced today, right after the new year, that they do think that the hikes are done, and now they're talking about, again, rate or dropping rates here in 2024. So kind of an interesting time. So yeah, these gray hairs, maybe the last couple of years being in the real estate world, we've gotten a few more. Maybe a few are tied to our kids. Certainly none are tied to our spouses. But when we go back and look, how's this last year been from a journey standpoint for you guys, and how have you guys navigated, and maybe just pause for 1 second as well. Give the group a quick primer. I know we've got some repeat listeners that have been with us since day one. We got a lot of new listeners along the way. So maybe just start with a quick overview of JWB Real Estate Capital, what you guys do, how you're in the real estate market, because you got a few different irons in the fire. And then, we'll kind of re-pick up that question about what's this last year look like.
Absolutely. Well, so JWB Real Estate Capital is our firm. We started 18 years ago. Actually, just in a few days here, we'll celebrate our 18th birthday. So, and we built our firm on the belief that real estate is an asset class that people want to have in their portfolio, but they just don't know how to do it. And so our entire business is here to make investing in real estate easy for busy professionals, for entrepreneurs, for those who probably at some point have said, hey, listen, I know that I've seen people be successful owning real estate, because of those attributes that you just talked about, Jason, but maybe they lived in the wrong market. Maybe they lived in California or New York where home prices are so high, or maybe they're so busy that they couldn't learn how to do it. And by the way, who wants to be a property manager as well? So maybe they just didn't want to have that experience. Well, those folks get to come to JWB. We build a real estate portfolio for them. It's all professionally managed and it's all under one roof. So get to deliver really wonderful returns for clients, but even more than that, it's an experience that you just can't get typically in real estate. And unfortunately, that's what keeps most people away from investing in the first place.
Well, and one of the things I love, and there's so many buzzwords in investing, right? And it's self-storage today and it's assisted living years ago. And that's okay. That's part of investing and people move from, asset classes inside of asset classes. What I love is, you said who wants to manage properties, and considering you manage over 6,000 of them, I think it's fair to say you do. But what's cool is you guys were really in the build to rent space before build to rent was even a buzzword. And so, talk a little bit about what that means when you say you build a portfolio. Like, I think it's still, even with build to rent and this idea of the marketplace saying rent is more important. So let's build communities, do that. You guys have been doing that for years. What's
Yeah,
that
actually,
mean?
yeah, so it was 2011 when we came across the idea of buying land, building a brand new construction home, and then renting that home to a resident, to a tenant. You may call them a tenant. We call them a resident because they end up staying so long with us, and producing this wonderful asset that then we could sell to our investor clients. And at that time prior, we, like many investors, only bought renovated homes, and they did the same process. And we said, well, geez, back in 2011, again, home prices were at their lowest point and land prices were at their lowest point, and nobody was building, so labor was inexpensive. And we figured out that we could create this model and ultimately have a better product and a better experience for our resident as well as our investor client. And so we kind of stumbled upon this. It was our first foray into it. It was about 40 new construction homes that we did the build to rent model in here in Jacksonville, which is where we're based. And we knew we really stumbled upon something that could create a lot of really great impact across many different sectors of the client base and the resident base. And so we continue to build that out and build that out. And now, 12 years since then, 13 years since then, it has become a foundation of how we actually build these portfolios for our clients. So we still do renovations. There's really nothing wrong with a renovation as long as you do a professional renovation like we do. But the majority of our inventory is actually brand new construction. So if somebody wants to be able to invest in real estate and they're a busy professional and they live in California, they can work with JWB over a series of phone calls. We'll bring that client on board, and then we have brand new construction homes that we've already built. They're already filled with a resident, and that property management is, of course, done by us for the long haul. And we get to simply just sell that asset or a portfolio of 3 or 5 or 10 assets to that client, and they're completely hands off and they're completely passive. So it all started back in 2011. It was before it became the build to rent phenomenon that you now know. It's before Wall Street and the hedge fund guys and gals all got into it. We were this relatively small firm back in 2011, and the Wall Street Journal actually put us on the front page of the Wall Street Journal in 2013 when they kind of said, "Hey, what's this outfit in Jacksonville doing?" And it's fun to look back now a decade later and see that all of the big guys, finally caught on.
Well, somebody's got to be a first mover, and I love Greg that it was you and JWB, because I think it really is. It's a niche that is needed, and 2013 it was needed because it was opportunistic. Today it's needed because the marketplace demands it, and that's a really cool space to be in, where the product need, even in the face of mounting interest rates, in the face of slowing real estate transactions and volume, all of those, which are not bad things, they're normal market cycles. But to see that asset class within an asset class that, while certainly may have be impacted to some degree by some of the marketplace conditions, but it navigated through it really unscathed, where other asset classes in the real estate space haven't been able to fare so well, or have faced bigger challenges. So If we take that model and we say, okay, this idea of build to rent, one of the things that I think a lot of people kind of keeps a lot of people out of real estate. It's not just the management, it's also the repairs and the things that come with that. And not to say that you can't have repairs on newer construction properties, because things can go wrong. But really, you're providing almost like active real estate ownership in a truly passive investment manner. And I think that's one of the things we talk about a lot on this show over the last year is that you can be completely passive, right? You can invest into blind pools or into investments where you're one of 1,000 investors, and that they own a couple of apartment buildings or a couple of self-storage facilities or some amalgam of the both. But what you don't know really is like, what does it really look like in build to rent? And really in the build to rent model, you actually have one address, the house, where it's physically located, the demographic of the renters, all of those things. And it's so, but at the same time, it's really sit back, relax, and enjoy the ride, right? And again, not to say things can't go wrong or won't go wrong that need attention, but talk to us a little bit about that, because I think from a listener standpoint, we have a lot of people that we see over the years that they want to be all in, like, I want to roll my sleeves up, give me the hammer, and I'm going to go be a real estate investor. And other people are like, whoa, I got money, I don't have time. So you've kind of bridged that gap even more so than some of these big funds have done in the build to rent space, because a lot of the build to rent that a lot of people are talking about is big communities, right? You still don't know who the tenants are, you still don't quite know the demographic. In this world, I could buy 5 properties and know all 5 addresses and the names of all 5 of my tenants. So how do you kind of see that, and how do you see that continuing to progress, and how's that looked over the last few years in the face of just the marketplace?
Yeah, what we're describing here is direct ownership. And direct ownership has positives when we talk about potential return on investment, and it also has positives on the experience side as well. A lot of times, the direct ownership model gets maybe a black eye, especially on the experience side, but we'll kind of dive into maybe why that happens and what you can do to protect yourself against that. But on the positive side, on the return on investment side, if you own this asset or those 5 assets that those addresses, you think about what's happened over the last 3 years and the home price appreciation that's happened on those specific assets. If you worked with the right provider in the right market, and you knew that you were putting yourself in a position to succeed, the returns on investment for 5 individual assets that were prime, let's say in Jacksonville with JWB, for example, did much better than a pool of assets that might have gone across the entire country or might have gone across 5 markets. And so you have the upside there when you can get a little bit more specific on where you're working and where you're building your portfolio, that you can see outsized returns. And a lot of our clients in Jacksonville have been able to do that specifically because they own these assets directly. Another thing to think about is on the lending side, when you have direct ownership, you have better lending options as well. So again, that helps create a better return on investment. So direct ownership is really an opportunity to see outsized returns. The fund model is more of kind of like a hedge model, right? You have a lot of different assets and typically a lot of different places. And then on the experience side, if you work with the right provider, you can make this experience positive. Like you said, Jason, it's real estate. It's investing in rental properties. It's not perfect. There are things that are going to go wrong. But if you work with a team that manages thousands of rental properties and has been in the game for 18 years, they have seen everything there is to be seen. They have a system and a process and training and wonderful teammates to be able to handle those things that, maybe are surprising. At the end of the day, we're renting to families that live in our homes for 4 or 5 years. And if you're like my family or like any family, weird things happen in houses in 4 or 5 years. So, that's the nature in the business that we're in. We can't change necessarily that those things may or may not happen, but what we can really have an impact on is the experience for you. And if we can kind of remove the emotion from being an owner of property and thinking about it as our house, our resident, and just simply think about it as an investment and look at the dollars and the numbers behind it. And if there's a team that can solve any of those challenges that come along the way, then this really can be that opportunity to create access for you as an investor that you might not otherwise have if you didn't have direct ownership. Again, a fund model, which is the alternative, usually is pretty restrictive for who can actually take advantage of that. You have to be an accredited investor many times. You have to make serious amounts of money. And when you go to direct ownership and you work with a vertically integrated company, you can be a non-accredited investor. You don't have to hit some of those really high thresholds as well. So, a big thing that motivates me and motivates our team, and one of the reasons I love our direct ownership model, is because it creates an opportunity to give access to everyday investors to take advantage of this asset class. And for so many reasons, there have been barriers for people to be able to not do it. And that's unfortunately why many people only have the traditional assets in their financial portfolios. And another reason why I love working with you and NewView and everything that we do to shed the light on alternative investments, it's like there is a better way. And the traditional way is not the only way. These types of assets deserve a seat at the table. And that's one thing that we're able to provide.
Well, and I think you hit on probably the biggest key takeaway for me when I hear that a lot of people struggle with is they want to be in real estate. They like real estate, but they view real estate as another job. It's a part-time job, and there is a way to do all of the things in real estate without being in a fund. Not that there's anything wrong with the fund model. It's just a different model. It's kind of like buying a stock versus buying a mutual fund, right? And again, both of those have their pros and cons for the right type of investor. But if you can pick your real estate and you've got a moderate, understanding and appetite to do so, that direct ownership model can prove to be very valuable, especially if you can cut out really the biggest headaches of owning real estate, which is the maintenance and upkeep. And so you've got to accept it's going to be there, but make sure you've got a team to be able to kind of help service that. And I think it's such it knocks down the greatest barrier to entry to real estate for many, because the fund model doesn't work for most investors because they're not accredited or they don't have the access to it. So to be able to give access to everybody, right, and everybody can invest and own direct and have a turnkey asset is a pretty cool place to be.
Yeah, I love it, man. And like you mentioned, this has been an interesting last few years in real estate. I feel like we together have lived 10 lifetimes in the 18 or so years that we've been doing this. I mean, we started, did you start, what year did you start? 2005, 2006?
2005.
2005 for you? Yeah, it's 2006 for me. And so, from 2006 to 2007, I started to invest in rental properties in a number of different places. And then of course the great the global financial crisis happened, the Great Recession happened, and real estate prices plummeted. And I learned so much through that. And I learned the value of assets that produce positive income, no matter what the market value of that home is. And, I still own those assets today. So that was a great lesson there. And I, of course, continued to stockpile rental properties. And we own over 400 rental properties as a company now. And, we practice what we preach. We believe in these things. And then, of course, we saw a new curveball with the pandemic. And, it brought back so many memories for me of what it felt like to go through the Great Recession. Because at the Great Recession, I didn't have a lot of experience at that point. I was still 23, 24 years old, and we had just started to get into investing on our own. But I knew the fundamentals, and I knew how the longer that you held assets that pay for themselves, you were in a better position to win no matter what happened as far as pricing. And I remember that. And I remember how consistent rents were. And so I had a lot of confidence as we went through the Great Recession, and those rental properties performed really, really well. Well, as we went to the pandemic, there was a little bit of fear, as we all had at that time, but I went back to the fundamentals. And what I realized is that single family rents across the country have never declined on record in any year. And I also realized that even though we didn't know exactly what was going to happen with the pandemic, that supply was very low in housing. And so, when we looked at the pandemic, we had confidence, and we said, I don't exactly know how this is going to work across all assets, but what I'm pretty confident in is that real estate is going to perform better than most. And what of course transpired is it performed the best. Home prices went up dramatically, rents went up dramatically, and we all know what happened there. So now, as I think about 2022 into 2023, and now as we're into 2024, I think about the interest rates conversation. And again, I go back to those things that I learned over the last 18 years. And even as the world was saying interest rates are going up, they're going up, and that the number of home sales are going down, which they did. They all said that home prices were going to crash. There were articles and talking heads about home prices going to crash. And we were one of the only outfits to say, we don't see that happening in 2023. And it was, again, because of the low supply. So at each one of these monumental inflection points in the real estate world, just going back to the same fundamentals of consistency in this asset class and how that creates a high floor for pricing, and just how unusual it would be for home prices to actually decline, and how rents never have declined across the country. It creates this foundation, this consistency, this stability that I think people are craving in their financial portfolio. So, that's been it's been interesting for sure over the last few years. But like I said, it's you have a lot of confidence when you've been through it so many times, maybe in a slightly different form. But at the end of the day, this asset class continues to perform. It's a critical need. People need housing. The government needs housing to work. And more often than not, that's why you see it perform so well.
Well, certainly the story of resiliency over the years, and in the wake of all of the things that you would think would be catastrophic, and even going back, and I think we were all not that we have anything figured out. It's the world is still a fluid place, and we're trying to figure things out as we go, and that's part of growth and development. But if I go back to 2008 and 9 and 10, that's when it was like the sky was still falling. And the one thing I kept coming back to was we had clients, right? And we had I had my own properties. And while you look at the face value and you go, well, that's not good, what you look at, the reason you bought it was the monthly income.
Right.
And that never changed. And there were some times where maybe you had a little longer gap between tenants, or you had, people that couldn't pay from a payroll standpoint. So there were some challenges, but overall, rents were still similar, and the ability to rent the property was still pretty good. And so when you look at that same model and say, well, if my portfolio is all in equities, right? When equities go down, what's the first thing that goes? Dividends, right? If it even has one. And so I've got this asset that's not producing anything for me. And so I'm just in this waiting game. And there's nothing wrong with buy and hold, and there's nothing wrong with being long, but I want to be long in my investments while still making money. And I think real estate has just proven to be so resilient, and even in the face of COVID, and even in the face of all these things that could have created a lot more challenges, and interest rate especially, because COVID wasn't a real estate based issue, right? That was a health issue that everyone economically wasn't sure how to manage it, but that was never a real estate issue. Rising interest rates is a real estate issue 100%. And the fact that in the face of rising interest rates, while there are some markets that have seen some declines, overall, real estate has stood tall through it. And so, is that enough to say it'll stand tall forever? Who knows, right? It's still an investment. It still comes with risk. And but I look back over the last 20 years and say, I like my odds in real estate.
Exactly.
Right? I like my odds. So, well, I love the story of JWB. I love what you guys not just have done, but what you are doing. I want to kick us over to our quirky question of the day, because I want to kick into the second half of the show. I know you've got a big event coming up. We've got a big event coming up. I want to talk about both of those, and then I want to talk a little bit about what are we seeing, right? So get that crystal ball out while we're doing the quirky questions, and we're going to talk about what lies ahead.
Mm-hmm.
All right, thank you. Remember, if you do have quirky questions, email those to Maggie with a Y at newviewtrust.com, and we'll get those read aloud. But these are always my funnest part of the show. Gregg, you have been through this once, but as we've brought on more listeners, I think we've definitely kicked up the quirky question side of it. So, all right. Question number 1. What's a hobby you want to try but you haven't?
It's funny that you asked that question. I was skiing with my family this week, this a couple of weeks ago for the holidays, and I should share with you that we are not avid skiers. I have an 11-year-old and 9-year-old, and they had never skied before, and my wife had never skied before, and I haven't skied in 10 years. But I started to think about how cool it would be to do that helicopter ski, that heli skiing, where they drop you down from the helicopter and then just go down the face of the mountain. So I'd love to try that. I'd love to be, good enough to potentially do that. So there we go. Heli skiing, if that's what it's called.
Greg, what I love is this is just how the world of an entrepreneur and the way you think. You're ready to take your family from the bunny slopes to the heli skiing. Like, let's not even focus on getting to the blues and then the blacks and the double blacks. We're just going to go in a helicopter, drop us somewhere on a mountain. We're not worried about the avalanche that we may create and may catch up to us. Like, we're just going to do it. So when you're in, you're all in. I love it.
There you go.
All right. Well, maybe we'll know the answer to this. So, road trip, airplane or car?
I would love to go in a car and have somebody else drive.
Chauffeured car.
Yeah, like a chauffeured like van. I want to go across the country. I just don't want to do the drive. I always have to do the driving. So if I have to do the driving, I'm flying. If I can do the road trip thing and have it chauffeured, I'll go there. I'll go to every baseball stadium. We'll just pack up the family. We'll live in the truck.
I love it. Well, and I, I think we always agree on a lot of stuff. I couldn't agree with you more on that one. I'm with you. If I'm in a car, I'm driving, and I just want to drive. Probably because I'm a control freak. But I'm with you. I want to get on an airplane if I'm going more than 3 hours because I just don't want to drive.
Yeah.
Even though I want to drive, it's a silly conundrum that I create. It sounds like you do as well. So, did you drive or fly skiing?
We flew.
Yeah,
we flew up to Pittsburgh, so a little bit too far for me to drive.
All right. Question number 3. If you could live in any time period, past, present, future, where are you going?
Oh, man. One of my big initiatives this year is to be living more in the present. I talk a lot about that with my wife and with my kids and living in the present. So I'm going to go with living in the present. I love everything about the opportunity that we have. I mean, if I'm going, just thinking about the world that we live in today compared to the world that we lived in just 5 years ago, the opportunities that we have to be able to do so much good in this world and the tools that we have today that we just couldn't even think about 5 years ago or 10 years ago. And I think right now we're still in this place where we're figuring it out. So we still have enough of the knowledge and the experience and the compassion for the world prior to all of these tools that we can easily keep that compassion angle. So I'm going with present and maximizing what all the wonderful things we can do today.
I love that, Greg. I do. And, the pandemic was incredibly hard on so many people and so many families. But if we strip away and say, let's try to find some good out of it, I think it did remind us all, whether it be loss of life and you realize that too many people left this earth a little too young and what check boxes did they not check? And for those of us that were fortunate enough to maybe not have the same issues on the health side, we were home a little bit more. We realized that, I don't have to fly to this meeting and shake hands for, and spend 2 days on the road for a 2-hour meeting. Zoom's going to get me there the same way. And so I love that. And I think it created an opportunity where we all can be present a little bit more. It is without a doubt. Now, I know these aren't for me, but having been a Yellowstone and 1883 and 19, all these different shows, I don't know why deep down I want to go back to like the 1800s. I just think I don't know that I'd survive. I'm probably not cut out for it. It's one of those, I think I'm probably a little bit more like them than I really am. But there's just something about loading everyone up in a wagon and just going. And not knowing where you're going and what's along the way. And I think there's a little bit of excitement there, but I think about 30 seconds without air conditioning and I'd be like, that's it.
Agreed.
Take me back to 2024. So
agreed.
All right, Greg, you're off the hot seat. Thank you for continuing to submit quirky questions. We really appreciate it. Keep them coming. Send them to Maggie with a Y at newviewtrust.com, and we'll continue to put those on the list and get those read aloud. All right, Greg, let's bring it down the home stretch here and let's kind of close things out today. I want to talk a little bit about the event coming up that you guys have, and we can certainly talk about the event we've got coming up as well. And the reason why I really want to talk about it, one is call it shameless promotion, because we're a speaker there and we're part of the event, so we want it to be great. But it's because I think education in this world, and you've been an educator in the 18 years you've been in this space, and we've been educators as a business in our 20 years. And so, this show is about education. And so, to me, live events are a way to not just go and learn, because you can learn in a lot of different facets, but it's the only way to go and build a network and talk to people that have been there, done that. And really, and it's something where when we wrap up the show every single week, we talk about the learn before you burn. It's like, how do you get with the people where you get the lesson and the experience without having to actually go through the experience piece of it? So what's the event? Talk to us a little bit about that. How do we get involved, and what can people expect?
Yeah, so we're really excited. We're hosting our third annual Not Your Average Investor Summit here in Jacksonville, Florida. And, we're all about helping people see maybe a different lens of how to become an investor or how to be successful as an investor. And we talk a lot about being a not your average investor. And, one of the angles that I try to show people is the best way to produce the best return on investment when it comes to investing in single family rental properties. And, the data is pretty clear that single family rental properties are a wonderful asset. They're a consistent performer. They produce very well when it comes to return on investment. But if you can package that asset, a single family rental property, and put it next to a change agent in that market, the path of progress, something that is going to skyrocket rents and home prices, you have the opportunity to perform even better. You get the consistency that this asset class is known for. But if you can know what that next big pop is going to be, you have this incredible upside. And what the data shows is that the biggest pop, if you look across the country, comes from a downtown that is revitalizing. And if you look at some of the other successful downtowns in the country, like Denver, Nashville, Austin, Texas, what you see is that home prices in those markets have gone up dramatically more than the average home price appreciation across the country. In fact, the data shows that in the last 10 years, you've seen an average of 23% more home price appreciation in those three markets that I talked about. And those three markets have revitalized, now thriving downtowns. And so the question should be, well, if you know that you want to invest in single family rental properties, what's the next downtown? Well, many people aren't aware yet, but Jacksonville is who we believe and what we believe is the next burgeoning downtown. Many people don't know this, but there's $4 billion of investment going on. That was billion with a B, $4 billion of investment going on in downtown Jacksonville right now. And that the population in downtown Jacksonville has increased 60% in the last 5 years. And a lot of that $4 billion of construction hasn't actually become that population. That population is still going to be growing beyond that. And so when you start to see these leading indicators, what we want to be able to show people is not just what Jacksonville is doing right now, not just the projects that are going on right now, but what are you going to see in 2 years? What are you going to see in 5 years? And more importantly, how can you profit from it as an investor? So that's really what this Not Your Average Investor Summit is all about. JWB has a significant investment in downtown as well. We've invested $68 million in downtown Jacksonville. We own 20 city blocks. That's the equivalent of 12% of the North Bank of downtown Jacksonville. So we're all in on downtown. We want to share this vision with everybody else, all of our investor clients, and those who want to see what it's like to be part of that revitalization of the downtown. So want to invite all of you to come and join us. Tickets cost $139, but because of our relationship with the New View team, we do have a special code. So if you'd like to be a part of this experience, you'll want to go to jwbsummit.com. That's jwbsummit.com. And that special promo for our New View friends is New View 99. If you go and just simply put New View 99 in there, the ticket cost drops to $99 for all of our friends. And we are only limiting it to 100 investors. I know it's going to sell out. So would encourage all of you to just come and be a part of it. I know you're going to be, pretty impressed with downtown Jacksonville, and of course, see the investments that you can take advantage of with JWB and get to meet the team.
Awesome. Well, Greg, we're excited to be there as well. I think it's something that for us, we too learn at all the events that we get to participate in, and I think there's always a handful of events that are difference makers in the way that they deliver and execute and give people information. And so we've participated with you guys in the past and always felt like there's something to be gained out of it. So $99 is a small investment in knowledge and hands-on, understanding. And whether it's the JWB event or any other. If you're sitting on the sidelines, right, you're probably thinking about your New Year's resolutions. What am I going to do different? If there's one thing that I think every investor that has found success in any sort of alternative, but real estate being kind of the one that we talk about the most, it is building a network. It's building a network with the right people. And if all you do is spend $99 to go and learn and build your network, it's a great starting point. More can and should and hopefully will come out of every event that you attend. But if that's your resolution, jump all over it. And those events are so big. And Gregg's also going to be speaking at our AltsCon event coming up, and that's a big event for us. It's a 2-day action-packed deal. We bring in people from all over the investing community. We'll have about 10 to 15 different speakers. We'll have about 30 or 40 different vendors, and hundreds of people there, all geared with the same thing. How do we learn, right? How do we network? How do we grow our wealth? How do we grow our network? And all through that process, whether you're taking your first step and it may be a baby step, or whether you're taking a giant leap, or whether you're already in the game and you just want to get better and kind of sharpen the pencil a bit, all of those reasons are good from an educational standpoint. So all the information for AltsCon we'll put on the screen as well, and you'll hear that throughout each of our episodes of the podcast as we talk with more of the speakers that are going to be participating. So Gregg, let's talk a little bit about maybe kind of the upcoming educational stuff on both sides of the fence here. What are you seeing? I mean, you talked about downtown Jacksonville and certainly your reference to downtown and kind of how that does create an economic engine for real estate, and not just the downtown, but the city as a whole. What are you seeing, maybe just overall, as we've started to see rates cool off? I think we're seeing the lowest, home mortgage rates than we've seen in 12 months or something similar. You know the stats better than I do, but what are we seeing, and what's it look like from the front seat?
Well, what we've been trying to share with folks is that you feel like the Fed did as much as they possibly could to tamp down real estate, because their ultimate goal was to tamp down inflation, and real estate and rents are a big part of the inflation equation. So the Fed did as much as they possibly could. They raised rates at the fastest rate in over 40 years. I mean, what more could they do? They raised, long-term interest rates almost to 8%, and they were at 3.5%, a year and a half before. I mean, that is some serious work to try to tamp down real estate. And all that really happened is real estate was largely flat. It increased a little bit. It certainly didn't decline. So you got to think about the other side of that. If we all know that rates are going to come down at some point, think about how low supply must be, how good the dynamics must be for home price appreciation to be happening, where the Fed did as much as they could for it to not happen, and all it did was just flatten out prices. Right. And if you look over history, when the Fed actually does decrease interest rates substantially, like a percent or even a little bit more than a percent, if they decrease those, you got to look at what home prices do, and they go up substantially. And so that's what we expect to happen. I don't know when interest rates are going to go down, but I know that they're going to go down because that's what the Fed wants. That's what's good for the economy. And when that happens, there's still going to be a supply shortage in real estate. And so what we expect is what has happened over the course of history is as interest rates go down, you see more people going to buy, you see mortgage application numbers going up, you see more demand for housing, and that's what we expect. So we expect home prices to go up. If I look out 3 years from now, I expect home prices to be up significantly from where they are today. Now, the path to actually getting there, I don't know what it looks like, because I still don't know what the Fed is going to do, and I don't know how all this turmoil in the world is going to play out. And it's largely based on what the Fed's actions are. If the Fed was to lower interest rates like they have, or excuse me, like they're speaking about doing, um, then, and we have interest rates decline like they have recently, then you could see significant home price appreciation in 2024. If the Fed keeps them high for a long period of time, then you might have flat home prices. We don't know in the short run, and I think it's risky to make predictions over the next 12 months because who knows what's going on in this world, to be quite honest. But one thing I feel really confident about is give yourself a little bit of time in this asset class, and home prices and rents are going to be significantly higher than what they are today. And you can't always say that about a whole lot of asset classes. Not every asset class performs so consistently. So that's what we're seeing. I'm along for the ride, just like everybody else, as far as what the Fed is doing. But I'll tell you, it's felt really nice over the last 2 months to see that even though the Fed hasn't dropped the Fed funds rate, our long-term interest rates have come down. And that's a factor of the overall market believing that that is an end of the really high Fed funds rate and really high interest rate environment.
Well, I love the comment about being along for the ride because there is no crystal ball, and if we had one, we'd probably all be a little too scared to actually look into it. But what is amazing about real estate? I mean, it's such a long investment that you can exit, if you need to and want to. So that's one beauty. You're not committed, but you typically should be buying it with a thought process of being long. No different than a stock. Really the only time you ever buy and sell any asset quickly is if you feel like you got such a great deal on it that the value is already been achieved. But otherwise, it is meant to be long. And I think real estate also keeps us from being a little bit too emotional about our investments. And so, I can say as someone that does a tremendous amount of education on being a savvy investor, I sold Netflix, Amazon, and Apple in the middle of the pandemic. And boy, I look like a real, idiot watching those all hit record highs of nearly doubling within 6 months. And so, but if I look at the real estate I owned, I didn't sell any of it. Right. And so, and I was a winner across the board. And so, you have to remind yourself. And the only reason I didn't sell is because it's harder to sell. Right. And so I think real estate gives us that edge. And so I can't encourage people enough to look. The other thing I love, and I always tend to kind of not think about it, and I think a lot of people don't, is we look at real estate as really being price. And I think you've got three ways to arbitrage the real estate market because you've got the price, right? There's appreciation, and hopefully it goes up, but that's really encapsulated in the asset. So you don't need it until you need it, right? And so it can go up or down. It's less important, but overall, you want to see growth. You've got rent arbitrage, certainly, right? We want to rent it for more than we're paying for it, whatever the expenses, are. And then you've got interest arbitrage. And I think we're in a world now where you may be able to capture that interest arbitrage in a really good way. And, while it doesn't feel good to pay 6.5% interest on an asset when you know that other people have paid 3% for the same asset, that's temporary.
Exactly.
And if rates go down and property values go up, not only can you refinance to a lower rate, but you can refinance with the ability to even cash out and use that money to go out and put that to work. So, there's so many strategies. I'm sure we're going to talk a lot about those at the upcoming event. And so hopefully, some of the listeners here take advantage of that, or we meet them at AltsCon when we put AltsCon on. That'll be an exciting time. Gregg, I want to close things out here. And first of all, thank you for being on the show. Thanks for everything that you do. Not only do you guys, help people enter and manage the real estate market, but you do incredible work in the community. And a lot of people don't know, and just having known you guys and be good friends for so long, what you guys have done in Jacksonville to build houses for people and veterans to go out and really revitalize neighborhoods and keep them up. And that doesn't seem like a big deal, but there's such a social impact to being a good real estate manager, because you can be a slumlord, and keep houses in disrepair, but you guys do the opposite. You build nice houses in neighborhoods that need nice houses. You take houses in disrepair and make them nice houses, but you keep them that way. And then what you guys are doing in partnering with the city of Jacksonville and different economic groups to revitalize an area that has lost its way, but has started to find footing is so cool. So thank you, Gregg, for all of those things. Any last parting words on your end before we get your learn before you burn and close out?
I just I love what you talked about as far as the power of the network, and I think coming to AltCon is going to be a wonderful experience, not just to learn the wonderful things that the speaker is going to be able to share with you, but to be able to network with the entire New View team and all of those speakers teams and the JWB team. We've been a sponsor of the event for multiple years now, and it's just such a wonderful opportunity to build that network. So I'm excited that you guys are going to be a part of our event. Can't wait for us to be a part of your event. And I can't wait for the folks to be able to be in a room with so many people that can do so much good.
Awesome. Well, the show notes will have links, promo codes, and everything for both events. So definitely take a look there and make sure that you're clicking through and finding out if the dates line up, and if they do, put in the work and effort to get there. It'll be worth your time. Greg, you may not remember from last time, but we end every show the same way with our Learn Before You Burn. This is where, in your 18 years of experience, I'm sure you've touched the hot stove a few times, and you got both the lesson with the experience, fortunately and unfortunately at the same time. But what's an experience that we can all get through you while still hopefully retaining the lesson without touching the hot stove?
Oh man, I didn't think about this one ahead of time. You know, um, I remember one of the most painful lessons we learned as a company was as soon as we got a little bit of success, and I'm going back to maybe 2012, we immediately we worked so hard to have some success. We worked for 6, 7 years to be able to have some success. And I remember 2012 was such a great year for us, and we sold a couple hundred homes, and felt like we really kind of accomplished something that we had set out for so long to do. And then as soon as we did that in 2012, we automatically started to think that it was just easy to be successful in doing something that was maybe not the same thing we were doing, but just slightly different, maybe just adjacent to what we were doing. And then all of a sudden it became like 6 adjacent things that we were doing. And by 2014, we tried to become the one-stop shop of real estate. And we had to learn a tough lesson. We've only had one layoff in our company history. And it wasn't during the pandemic. It wasn't during any of those times. It was self-inflicted. And it was because we tried to become too many things and we lost our way. In 2014, we had to lay off 7 people on our team. And I still remember that day. It was the worst day of my career. So I guess the lesson that I have always taken from that is to be very focused on what makes you great and stick to your hedgehog, to steal a term from Jim Collins' book, Good to Great, talks about the hedgehog. So that's a very real thing at JWB. We're thankful for the opportunity that we have to be able to make an impact, but we're very cognizant of what allows us to do that, and that is our hedgehog. By doing that, focusing on that, we will be able to make sure that we're here for the next 18 years and 36 years and whatnot, being able to have that opportunity.
Well, having been through similar situations in our New View career and what we do, I couldn't, that advice is so sound, and it's a lesson that it's worse than touching the hot stove, because it's not only is it painful, but the problem doesn't just go away overnight, and it takes a lot of work and effort to course correct and not course correct a little to the left or a little to the right, but truly course correct. And Glenn Mather, who founded New View, one of his things he always says is, nothing gets in the way of great success like some success.
Yeah.
And, I can't help but think about that same quote, because it's so true. And you think, well, when everything's going right, nothing can go wrong. And it's a very humbling reminder when you start stepping outside of that, what made you great and what you've been working so hard, and think that whatever you touch will turn to gold. That's a real tough lesson. So thanks for sharing that, Greg. And if you're hearing that and you feel like, hey, new year, what should be on my resolution list? Certainly stay in your lane, right? And if you're not in the right lane, find a new lane. There's nothing wrong with that, but you can't be in 10 lanes at once.
Mm-hmm.
So be good at a few things, not everything. So Greg, thank you. Always good to see you, buddy. Really appreciate you being on the show. And we'll see you here in I guess maybe a few weeks up in Jacksonville and then here in Orlando for AltCon.
Absolutely, man. It's a special friendship, special partnership that we have. So I'm very appreciative. I didn't mention the date for the summit, the Not Your Average Investor Summit, but it is February 16th and February 17th here in Jacksonville, and certainly hope to see all of you there.
Well, I know I'll be there, Greg. Looking forward to it, man. Have happy New Year to you and your family and your businesses, and keep doing what you guys are doing. We appreciate it.
You too, bud. Thanks, man.
All right, Greg. We'll see you.
Thank you so much for listening. We hope the information within this podcast has given you the tools that you need to find your way to financial independence. We would love to partner with you on this journey. Text ALTS, that's ALTS, to 407-708-1853 to learn more about how to get started today. Don't forget to follow us to make sure you don't miss a second of content, and we'll see you next week.